Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 29th, 2024, and we're diving into the latest earnings report from Inari Medical, a leading medical device company focused on treating venous and other diseases. Joining us is John, our Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Inari Medical has been making significant strides in the medical device sector, and their latest earnings report for the third quarter of 2024 provides some interesting insights into their performance and future prospects.
Revenue and profitability overview. Let's start with the top line. Inari Medical reported a revenue of $153 million for the third quarter of 2024, marking a 21% increase over the same period last year. John, what are the key drivers behind this growth?
Absolutely. The revenue growth is primarily driven by the expansion of sales territories, the opening of new accounts, and increased adoption of their procedures. Additionally, Inari's global commercial expansion and the introduction of new products have significantly contributed to this impressive growth.
Despite the revenue growth, Inari reported a GAAP operating loss of $13.6 million. Can you explain the factors contributing to this loss?
Sure, the operating loss is mainly due to increased operating expenses, which rose to $147.1 million from $109.8 million last year. This increase is attributed to higher personnel-related expenses, including commissions and share-based compensation, as well as costs associated with the expansion of their commercial and R&D teams.
Operational efficiencies and future outlook. Inari's gross margin for the quarter was 87.1%, slightly down from 88.5% last year. What does this tell us about their operational efficiencies?
The slight decrease in gross margin is primarily due to the product mix and ramp-up costs associated with new products. However, maintaining a margin above 87% is still quite strong, indicating that Inari is effectively managing its cost of goods sold despite these challenges.
Looking ahead, Inari has raised its full-year revenue guidance to between $601.5 million and $604.5 million. What are your thoughts on their future outlook?
Inari's revised guidance reflects their confidence in continued growth, driven by new product launches and international expansion. They also expect to achieve sustained operating profitability by the first half of 2025, which is a positive sign for investors looking at long-term growth potential.
Strategic initiatives and market expansion. Inari has several strategic initiatives underway, including the presentation of their Peerless study and the upcoming market release of Artix. How do these initiatives position Inari in the market?
The acceptance of the Peerless study for presentation at a major symposium highlights Inari's commitment to clinical excellence and innovation. The full market release of Artix, following FDA clearance, is expected to drive further adoption of their solutions. Additionally, their plans to expand into Japan and China open up significant growth opportunities in underserved markets.
CEO Drew Hykes mentioned a strong commitment to addressing unmet patient needs. How does this align with their current strategies?
Inari's focus on purpose-built solutions for venous thromboembolism and other targeted diseases aligns well with their mission to improve patient outcomes. Their strategic initiatives and market expansion efforts are clear indicators of their dedication to transforming patient care in these areas.
Financial health and risk factors. Let's talk about Inari's financial health. They reported cash and cash equivalents of $112 million. How does this position them financially?
Inari's strong cash position provides them with the flexibility to invest in growth initiatives and manage operational expenses. However, they reported a net loss of $18.4 million, which highlights the need for careful management of their expansion costs and operational efficiencies.
What are some of the risk factors that investors should be aware of?
Key risks include the costs associated with their aggressive expansion strategy and the potential impact of international market entry. Additionally, managing their deferred tax liability of $36.7 million will be crucial in maintaining financial stability.
Key takeaways. In summary, Inari Medical has demonstrated strong revenue growth and strategic initiatives that position them well for future success. With a revised full-year revenue guidance and a target for profitability in the first half of 2025, they are on a promising path. John, any final thoughts?
Inari's focus on innovation and market expansion is commendable. While there are risks associated with their growth strategy, their strong cash position and commitment to addressing unmet patient needs make them a compelling investment opportunity.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Inari Medical's performance in the comments below.